Hi everyone, welcome back to my YouTube channel. So we are still continuing with our series on how to calculate income tax, personal income tax. So on our last video, we touched on gross income and exempt income. Today, we are going to be looking at access laws, deductions, and contributions. Okay, so access loss by definition is when your deductions exceed income. So income is your gross income less exempt income. So those are the two components that we covered in our previous video. So if it happens that you have deductions that are more than your income, you are allowed to carry forward the loss that you incurred in the current year to the following year of assessment. So I have a simple example on the screen where in 2019 I have an income of 30,000, deductions of 45,000, meaning that I have a loss of 15,000. So in the following year of assessment 2020, if I carried on trade, so there's a provision that you'll need to have carried on trade in that year of assessment to be able to use your assess loss. So in 2020 I have my income of 60,000, then I can bring forward the assess loss that I incurred in the previous year of assessment. Okay, so the next component is deductions, where we have two subcomponents: general deductions and special deductions. Under general deductions, we have further components, positive and negative. So in my next slide, I'm just going to show you the difference between these two. Okay, so firstly, under general deductions, we have a positive definition which gives us guidelines when we want to determine whether our expense is deductible or not. So firstly, we have carrying on trade. So before you want to deduct anything, you should be carrying on trade. It's either you are working, you're earning a salary, you have a business that is not registered as a separate company, a separate entity, right? Expenditure, so you need to have an expenditure. This is straightforward. You need to have an expenditure before you want to deduct something. Actually incurred, meaning that you should have an obligation to pay, or you should have paid that expense. You cannot include foreseeable expenses in your deduction, right? So if you're expecting to incur a certain amount in year 2022, you cannot include it here in 2020 because you have not incurred it. You are just expecting. During year of assessment, you cannot bring previous years expenditure into a current year of assessment. In projection of income, you need to ask yourself the expense that you have, how is it linked to your income? Was it in production of income, or it was your personal expense? If it was your personal expense, then it cannot be included. It should be in the production of the income that you have derived. Not of capital nature, you need to look at the intent as to why you have incurred that expenditure. I'll make an example. If you are in a business of buying and selling furniture, if you have bought a furniture for your own office, that is not deductible because it was not in production of income. It was not to be sold to a client, but it was for your own use. It's your capital assets. So I'll cover with you later on the capital allowances, because there are sections where you can deduct you have allowances on your capital assets, but you cannot include it here under general deductions because it is of capital nature. However, if you bought the furniture to be sold to the client, then you can deduct it because it is your trading stock. It is what you are in business for. So you can add it. So that's how you can differentiate between whether the asset is of capital nature or it's not of capital nature. So it should be producing income. It should be in production of income. For the purposes of trade, so the expenditure that you have, it should link to the trading activity. this is more similar to the production of income. So you need to look at the expenditure and say, where did I incur this expenditure? Was it in trade, in any of my trading activity? If it's not, then you cannot edit. Yeah. Okay, next on under general deductions, it's negative. So with negative, this is easy, straightforward, because the tax law decides for us what cannot be deducted. So I really recommend that if you're not sure whether your expense can be deducted or not, this should be your starting point to say, okay, is my expense listed in this list where the tax laws have stipulated that the expense is not deductible. So there will be a good starting point. That's just my advice. And then if it's not listed there, then you can use the positive definition, where now you use the criteria to match your expense. So there's a whole list. I've put the link on the description box. However, I've included just a few on my slides because these ones are more familiar. You'll be more familiar with them. Domestic expenses, so you cannot put in your deductions a rent. You cannot put water and electricity. So if you're an employee, you get your salary, you cannot deduct petrol to work, because that's a personal expense, right? And then expenses to produce exempt income. So I included this because in my first video I added, we covered dividends. So dividends exempt income, right? They are not taxable. So if you incur costs to produce dividends, then you cannot include those expenses as deductions, because your income is not included, or is not taxable. So it makes logic. Private maintenance, so your clothes, you cannot put the expenses where you have spent on your aid guys, and then you put as a deduction. That's a no. And then also penalties, fines, interest, tax, interest, I mean. So I'll categorize these ones as sin expenses, because obviously you get these expenses because you did something wrong, right? So penalties, if you haven't paid your tax on time, you'll get penalties. Fines, if you are speeding, you cannot deduct that. Interest, if you have a debit balance on your bank account, and then like you cannot just include that as a deduction. So this is just the few. I have a comprehensive list that is added on the description box. If you're still not clear with any of them, you're more than welcome just to leave a comment down below or send me an email.